Thanks very much for joining us this morning. We're actually from UK and US now. We're sort of in both markets. But so my background is I worked within venture capital at a couple of different VC firms in the UK. I've worked in entrepreneurship, banking, for EY, various things. And this business came together, looking at effectively the marketplace, through experience of problems that we found that in venture capital, we found we couldn't find the deal flow we wanted, entrepreneurs trying to raise money, and we had to try and bring those parties together in an efficient kind of way. So I'm going to show you a quick video. If there's time, we may have a corporate video at the end, but we'll see how we go, and obviously open to Q&A afterwards. So one of the interesting things about fundraising is amazing how many things in life are like dating. You need to know which category you're in, what you're doing, who might be a fit for you. If you're on a dating app, you kind of have certain preferences. If you're on fundraising, you also have certain preferences. And you've always got to think, if you're trying to raise money as an entrepreneur from venture capitalists, people who back growth businesses, that you have to think about what they're looking for. It's amazing how often entrepreneurs don't actually understand that what they have to do is persuade, almost do a sales job on a venture capitalist to get them to support them, understanding what their metrics and their métiers might be. So I've got a quick video just sort of shows you quickly what the product does, and I'll also tell you a few other things about us as a marketplace, effectively.
Did you realise the average entrepreneur and investor relationship lasts longer than most marriages? So you want to make sure you find the right match. Just like in love, there's a perfect match for entrepreneurs and investors. Qodeo automatically matches entrepreneurs with best fit investors, saving you time and money kissing frogs. Revolutionising the way entrepreneurs and investors match and get funding, businesses of all sizes can set up a profile in just 5 minutes and gain access to a world of opportunities for just $9.95 a month. And for a little more, Qodeo's concierge service can help you improve your profile so you attract the right investor even faster. Whether a startup or an established business looking to evolve, Qodeo connects you with opportunities far beyond your own traditional network. Always on the hunt, Qodeo instantly notifies you when your preferred match is found. No long courting process or middleman required. Qodeo helps you confidently connect directly with best fit investors worldwide, giving you access to more than 1,800 leading venture and private equity firms, pre-vetted by 30 of the world's top business schools. Qodeo matches you with the right funding, fast.
So we've actually gone from what was 1,800 to 6,200. The problem is the woman who did the voiceover left the agency she used to work for. We had to try and find somebody else to voice over to 6,200. We're actually now at about 6,500 venture capital and private equity firms on the funding side of things. So what's the problem? Well, the head of a leading VC venture capital firm in the US said to me, we don't need something to try and bring people together. We get bombarded by opportunities. Why would we actually bother to look at anything? And then I was having this chat with him saying, well, actually, wouldn't it be useful if you had an inbound filter, which was an automated kind of filter, effectively helping you sift through opportunities, and particular opportunities you don't see. So what happens in venture capital, as we'll see, is that most people do deals with people they know, and they don't see the other opportunities. And particularly with diverse entrepreneurs trying to seek funding nowadays, most VCs won't actually have any angles to how to access those kind of folks. So we can bring VCs together with entrepreneurs potentially. They lack relationships. Most venture capitalists don't come from business development backgrounds. They come from engineering, consulting, banking type backgrounds where you're sitting behind a desk and analyzing things as opposed to going out and networking. And on the other side, the entrepreneurs obviously lack capital. So you have to kind of bring those parties together and do what we call effectively cutting through the noise. So we've got a solution. This is actually our latest website. I was talking to somebody the other day on our advisory board, and we've got this frog, and they said, no, it's a toad. You're kissing a toad rather than kissing a frog. But the idea is what we're trying to do is to save people money and time in terms of who they're talking to. So from an entrepreneur's perspective, if you go onto a platform, you quickly try and sort out who you should try and speak to, who shortlist lists of people, of potential investors for you. From the venture capital perspective, you can try and see who's in your zone and around your zone that you might not have spoken to beforehand otherwise. And what we do is we built our own database, our own data structure, our own data itself, and our own algorithms that do that matching automatically and grades on a sort of gradient, effectively hot to warm to cool matches and sorts those for you and tries to point you in the right direction as to who to try and speak to. Obviously, talking today to a conference like today, we're trying to focus on what are some of the dynamics of the market we operate in. So people naturally in this industry try and focus on charging large amounts of money for data, and most people don't understand what to do with that data. Most people want a solution rather than actually data as such. And most people try and focus on trying to charge lots of money to venture capital firms. But in fact, our research shows, which we do with Cambridge University and with INSEAD, there are probably about 582 million entrepreneurs out there in the world who are actually seeking some kind of funding, whether it be early stage entrepreneurs. People often think entrepreneurship is about startups. Actually, a lot of entrepreneurship is about mid-market, and an awful lot of the entrepreneurial businesses on our platform and a lot of the venture capital firms or private equity firms on the platform on the other side are mid-market businesses, printing businesses in Malta, chemicals businesses in Malaysia, construction business in Australia. There's all kind of different opportunities of businesses who are seeking some kind of capital other than bank capital, some kind of equity capital, not the listed markets potentially, to grow their businesses. So it's a very large market size. And then what we've done is sort of sliced down in terms of what the opportunity is from our perspective. And if we even got to a fraction of the billion-dollar market we try and seek in an obtainable market, that'd be a pretty great place to be. But we're on our way to that. And we see it very much as an ecosystem. There's a quote here from a Berkeley University business professor who's on our advisory board. He said 80% of the entrepreneur community is also regional and diverse. So historically, how people came together in marketplaces effectively in the venture capital industry would be you go to a meetup somewhere, you go to a conference, you go and try and meet people, networking. That depended upon how good your networking skills are. You do a pitch. There was pitches obviously here yesterday. Pitches are, some people are good at pitches, some people aren't good at pitches, but you have to get selected to do the pitches, etc. And then, of course, you have to be in that zone. So historically, venture capital, Silicon Valley, then it became about Europe, now it's with Berlin, Tel Aviv, other places like that. But what happens if you're in Malta? What happens if you're in South Italy? What happens if you're in North Carolina, where I was yesterday? There's very little venture funding historically in those kind of places, and there's huge amounts of entrepreneurship. So in bringing together an online platform, an online marketplace, you create the opportunity to put those groups together who would never normally be put together. And what we decided as a model, with the folks who asked me to talk about the model a bit, is we decided not to go for a commission-based model. That's actually very complicated from a regulatory perspective. And we decided not to charge the VC market. As you saw on the previous slide for what the size of this ecosystem is, there are probably about 25,000 venture capital and private equity firms, each employing between 5 and 10 professionals. So it's a relatively small market, very hard to sell to. The entrepreneur market, as you saw before, is huge. So we decided not to go for a commission-based business or to charge VCs. And what we do is with the VCs is that if they give us their data, then we give them the system for free to use. That brings co-option. It's what's called a give-to-get model, which we were in fact told about some time ago in the early days of the business by a very successful guy who founded what is now IHS Markit, the big financial data business, where he co-opted various investment banks in his business, coming into his business in return for shares in his business and free access to get some good names on board to be able to tell other people who's actually in their system. So we've got sort of 3 tiers of pricing at the moment. We've got free, which has limited functionality. We're called Pro, which is $9.95 or €9.95, 9 Swiss francs 95, whatever it might be, which gives access to entrepreneurs to be able to see who their funding matches are and potentially reach out to them. But actually what we see is generally actually VCs reach out to entrepreneurs more than entrepreneurs reach out to VCs, which is kind of interesting because they want to be able to cherry pick the opportunities. And then we launched what we call Concierge, which was hinted at in that video before. And that is where we allow the online process to happen, but we also give a review of the profile of the entrepreneur on our platform. And it's quite extraordinary how many basic errors most entrepreneurs make when they're trying to sell their pitch to venture capitalists or investors. They undersell their businesses in most cases. You'd think like on LinkedIn profiles, people would oversell. In fact, most entrepreneurs undersell. They're seeking too little money. They don't tell their story in a big enough way. And it's not a matter of hyperbolizing their business or telling lies effectively. I was on a venture capital conference yesterday in North Carolina, and venture capitalists are talking about entrepreneurs sometimes telling lies because you've got to try and sell your business and then sort of scroll back to tell the reality of your business. But actually, most entrepreneurs undersell their business. They look for too little money, they're going to run out of that runway too quickly, and they undersell their proposition. So we help them improve their profile, make them more matchable, and then we give them access to reports and invitations to events, etc. So what are some of the challenges? This is one of the questions that were asked by the folks here. Well, obviously we're serving multiple markets. As an online platform, we're extremely global. And the venture capital and private equity industry is extremely global. You have a lot of trends. I was talking to somebody in Poland on Monday, and they're talking about how Polish entrepreneurs may want to raise money in Poland, but a lot of them want to go to the UK or the US to try and grow their businesses. Historically, markets like Israel worked that way, where there was very little venture capital funding. People had to leapfrog to the US, where the markets and the money were. It's slightly more dynamic now, but serving multiple markets is a complex, as we here will know, a complex task to have. And there are some markets that are difficult to communicate to in English. So we haven't quite given up on the French market, but France is very hard to work with in a very small market. And I was telling somebody the story yesterday, actually, how I was in Paris trying to meet with a government agency to kind of cooperate with them. And at every part of my journey, I was thwarted by some strike. So the airlines were on strike, the trains were on strike, the metro was on strike, and Google said you could get to the office, but you couldn't get to the office because the metro actually had gates locked across it. And I went to go and see him. I said, I love your country, I love your food, we want to do business here, but it's hard. And they said, well, do you have a French website? And I said, well, we'd love to have one medium term, but we don't have one yet. So until you have one, we can't really cooperate with you. So it's kind of, so some markets are kind of difficult to work in. And I know there are a lot of Australians here today, but the English does kind of work over there too. But it works here as well, hopefully. And English generally is a lingua franca, but the language issues, dynamics, geographies, you find different markets have different kind of dynamics. So some markets are very much early stage. Israel is very much early stage technology business, lots of cybersecurity businesses, those kind of things, seeking funding. Britain is hugely diverse. America's hugely diverse, but it depends where in America you are. So some markets are very middle markets, of growth businesses that are seeing succession change, that kind of thing. Other places more tech focused. So we've had to sort of try and focus how to achieve our marketing in those various ways. And people want solutions rather than data. So you have to explain to them, it's when you're creating new marketplaces and creating new opportunities, the previous speaker talked about blue ocean strategy, you're trying to actually create new market spaces effectively. And when you're trying to create a new market, you have to explain to people what this kind of product does. We're not a crowdfunder, we're not an investor, but we're trying to shortlist who you should talk to as quickly as possible to save you time and money on your fundraising journey. So you as an entrepreneur can spend your time running your business rather than trying to understand the venture capital market. And then, as I hinted before, there's a problem that it's cracking networks open. So one of our advisory board is a Harvard Business School professor, and he said 80% of the partners in venture capital and private equity firms in the US went to Harvard Business School, or maybe Harvard Business School in Stanford. So you tend to find that you get very narrow networks. It's very hard to crack those networks as an entrepreneur or as a new venture capital firm to try and collaborate. And in this era of diverse entrepreneurship, it makes it that bit more difficult still. If you're coming from a regional community or you've gone to a community college, you haven't actually gone to Harvard or to Stanford business schools, how are you meant to access those kind of people? And there's actually a very interesting report, a sort of a review that was put out in Harvard Business Review by professors from Harvard Business School showing that VCs or investors who tend to invest in people like them. And when they invest in people like them, they get low returns. So platforms like ours can actually open up other opportunities that would avoid being missed out on, effectively. There's a FOMO type thing, but avoid being missed out on that the traditional networks would not afford. So I'm just mentioning here, there's you can read more on our website generally about what we do. We have a blog that has quite a lot of information about access to capital and how best to go about it, etc. And we have a discount coupon here for conferences and partners who work with, 50% off for what we call Wow Qodeo if you go to the site. And we tend to try and drive people towards the concierge product because we've had most success with that and most sort of a lot of traction with that. But if you use that coupon, if you sign up to the service, that will give you 50% off, and hopefully that's working today. Occasionally it'll glitch. I've got a few minutes left. If there's time, what I'll do is I'll show you a corporate video, kind of rounded out about us. It was actually put together for our fundraising process ourselves for our own business. Although we've used our own platform to identify our own investors. But I'll show you the video quickly. It's shot in the UK, and people in America and all Australians who tend to like some of the visuals of it. And then I'm open to questions, if that's okay. Thanks very much for today. And thanks very much for the folks organising this. They put things together very short notice. And I almost didn't make it. I got stuck in a plane yesterday in North Carolina because of the storms here, but I missed the party. I was aiming to come to the party, and I missed the party. So stuck in a runway with planes cancelled, but managed to make it, which I'm very pleased about. And happy to answer questions afterwards. As an entrepreneur, venture capitalist, an advisor, and a banker, I was so frustrated to find that I couldn't raise funds easily, build pipelines. I thought there must be a better way. And drawing on experience I had at business school here at Cambridge and other networks I'd built, I put together a team to solve those problems. And that's how Qodeo was born. Qodeo is the app where entrepreneurs, venture capitalists, and corporate advisors can find best fit funders, network, and build pipelines. In our research, we found that entrepreneurs spend thousands of pounds and hours trying to identify who might fund them. We found a way at Qodeo to get entrepreneurs to speak to the right venture capitalists, saving both money and time.
Qodeo is available as a desktop and mobile app designed to connect people across the global venture community quickly and directly. Users create a unique company profile in a few easy steps and tell us what they're looking for. Qodeo filters thousands of investors and focuses on the few opportunities that are likely to materialize. Investors get alerts when qualified businesses that match their interests and criteria connect with their firm.
We talk about the data iceberg. If you can imagine, all these entrepreneurs and venture capitalists are sailing along trying to make decisions based upon what they can see above the water, the 10% of what they see above the water. What Qodeo is doing is looking at the whole iceberg so that entrepreneurs and venture capitalists can navigate around. Qodeo uses in-person interview-based data. We send MBA students from leading business schools around the world to go and interview private equity and venture firms in their offices. We put that together with data from partners, from our users, and also from that public data that other sources sometimes use. The problem is that other sources are based upon historic reported partial data, and Qodeo's system is far more dynamic and be able to get people better information to make better decisions faster.
Having a face-to-face interview is much more beneficial when gathering data because it helps us know what is going on the ground because our interviews are conversational instead of having a set pattern. So during conversations, we get to know a lot about the feel of the industry, and also there's a lot of feedback associated. Now, in my interviews, I'll be interviewing close to 30-40 firms. So the venture capital leaders are themselves interested in what's going on in the industry, so it gives a broad overview.
I studied geography here at Cambridge undergraduate, and so did our leading cornerstone investor, Sir Harvey McGrath, and that was our common theme. We look at the private equity community as an ecosystem with interactions between entrepreneurs, venture capitalists, and corporate advisors, and only by understanding that community as a community can you serve them right. We built the beta and data with the backing of leading industry professionals. Qodeo is raising funds now to roll out our new freemium product, build our team, and grow the value of our business.
When I met Simon and I had the opportunity to see what Qodeo can do, I was very impressed with the idea of curating qualitative rich insights with quantitative data, with capturing various data sources and curating an experience that to allow entrepreneurs and investors to completely change the way that they get funding and that they can run their businesses.
Qodeo is scaling up. What we've already built is a significant database. We populate that database through our in-person interviews and other activities, and we built our original team.
Our research has shown that there is a need and a gap that Qodeo fulfills, and we believe that in the next few years, Qodeo can become a well-established platform that help to create new efficiencies in the venture community by connecting investors and giving data to entrepreneurs in ways that haven't been seen before.
Qodeo's users get to market faster and better. Our entrepreneurs find funding, venture capitalists identify opportunities, and corporate advisors build pipelines. In 5 years' time, those folks will be more successful, and Qodeo will be the leading data platform for the venture capital community. Unfortunately, Offer, who was videoed in that video, died in a surfing accident, but he was a marvellous advisor to us. Just want to mention to you also that the app, which was cited there, an actual mobile app as opposed to the desktop version, That new version will be out in July, August. I'm promised July by the CTO, but that means August or September if you're lucky. But that will be out shortly on the App Store, both Google and Apple. But at the moment, the best way to sign up is HTML5, so you can sign up on a phone as well, but it is on a desktop. That's great. Thank you very much for your time today. Happy to answer any questions. I'll be around for today, and if anybody wants to catch up with me, I'm sort of seeing the back there because I had to be sort of mic'd up and stuff, but happy to catch up with folks a bit later and maybe some Q&A now, if that's okay.
Simon, thank you very much for that. Very interesting what Qodeo does, and I think from a marketplace perspective, which is where we're focusing on, it sort of raises a lot of questions. We're going to follow through some of these. There are multiple companies that do similar things like OpenVC. As a young founder, I'd love to see this, but for angels, is that in the pipeline?
Yeah, so that's an interesting question. So we don't think there is something that does quite what we do in the way we do it, because we create our own data, which includes a lot of qualitative information, which passes through algorithms which create these rank matches. So we're not actually similar to most of the plays which are data plays, or on the other hand, things like crowdfunders. So we are quite different to that kind of perspective. In terms of angels, we do get a lot of requests for will we bring angels on. There are some regulatory and other issues around angels and family offices, but that is a medium-term plan to bring them on.
So what's the average deal size that goes through the platform?
Yeah, that's a great question. There's a huge range. So we do tend to get a lot of really early stage entrepreneurs coming along, and we try and help them along various ways, but they tend to often be pre-VC. So sometimes you can almost bouncing people off the atmosphere to a certain extent, but actually it's quite a useful thing to tell entrepreneurs if they're too early. And then we have some very large sort of raises for sort of later sort of private equity transactions. So we have everything from the smaller VCs that deploy between $2 and $5 million potentially in a market to hundreds of millions, if not billions, in various circumstances. So it's a huge range of entrepreneurship that's actually on the platform.
Which sort of then leads neatly into this next question, which is $999 seems rather cheap. If you're helping someone raise $2, $3, $4, $5 million, and you're getting all of $9.99 out of that to me sort of seems a bit of a mismatch for the value created and what you're being rewarded.
So the reason why we priced it as it is, and we went through a process with Offer, who you saw there, and some other folks, is that if most of the services out there are either commission-based, and there's quite a lot of suspicion around how those kind of work in various ways and what commission do you have to pay when, etc., or very high price points, and there's nothing kind of in between. If you have low price points, you can aggregate very large numbers of subscribers. And at a rate of $9 or $10 or /$20 per month, you tend to get relatively low churn. We only get 5% churn off the product, and we thought we'd get about 20%. Get very low sort of churn, because people tend to stay on the system, they're doing different things, they begin to raise money, they go back, they look at their business plan, they change their business plan, they come back again, on over a sort of period of time. So low price is very democratic, it's very enfranchising, helps us to gain large numbers of users with low churn, and that's where that kind of came from.
Can you share any unit economics for each subscriber?
Well, unit economics, I mean, it costs us at the moment about $58 to acquire a customer, and we're actually doing a number of things to try and halve that at the moment. The lifetime value of the customer is $94 upwards at the moment, so we are potentially profitable per user, but we're sort of working on things to both reduce the cost of acquisition and increase the lifetime of the customer.
Okay. How long is the process on average from signing up to closing with an investor?
Okay, so we don't do the transaction itself on the platform. It's like dating. It's like on a dating app, you meet potential partners, and you then go offline to go and do that. So we have some capability within the system, put you in touch with VCs, but you go off and do the transaction separately. So our aim is to save you the hundreds of hours it takes to even start the process. So once you know you're going to start doing a fundraising journey, go into the system, and it will tell you who you should go and talk to. That sort of short circuits that several months of stuffing around, trying to do Google searches and other things, trying to work out where to start, or looking at printed directories or other sort of forms of directories, etc. So the idea is to telescope that part of the process at this stage.
Okay. There's actually a question which you may or may not want to talk about. Okay. How many subscribers do you have, and what are the churn levels? And what's the incentive to stay long term?
So we have about 18,000 entrepreneurs, about 6,500 VCs in the platform, one way or another, and we're growing the paid proportion. We don't disclose the paid proportion of the entrepreneur subscribers, but we're growing that quite aggressively at the moment. We're aiming to get to about sort of 10,000 paying subscribers by next year. And the churn rate I mentioned 5%, which is low, varies slightly. Data
5% per annum or per month?
Per annum at the moment. So,
okay.
So that's sort of data we get from Stripe on our subscriptions. That's on the paid subscriptions, as opposed to the free free, we get lower churn than that.
And is there a reason why you don't go to the angel? I'm trying to understand the angel, because there's a lot of angels out there with money, there's a lot of family offices and so on.
Yeah.
Why wouldn't you give them access to the platform, given it's literally just a dating platform?
Yeah, there are about 700,000 angels out there versus 25,000 VC firms. There's a huge marketplace potentially. The number of aspects, there are a lot of players in the angel space trying to do various things, more angel management systems and things where you can upload decks, try and do pitches and that kind of stuff. We'd have to do a number of changes technically to the system. We'd also have to vet the angels. So at the moment, to get it to be a VC that comes to the platform, you either have to be interviewed by one of our business school students, we've done over 1,000 of those interviews globally, or you come online organically and we do a 5-point check that you are a bona fide VC. Much harder to check the bona fides of angels. And there obviously are various sort of regulatory risks in different markets. So the UK is regulated differently to Australia, which is regulated differently to the US in terms of putting people together. We're not an advisor, but you want to be very careful not to tread into the advisory space and have to get regulated. Right. So we are working on that for next year.
Great. Thank you, Simon. I like the business. I like what you're trying to achieve, and good luck with your continued growth.
Thank you very much. Thank you.
Thank you.
Much, everyone.
Thank you very much. And I need this.